Hello Sector Watchers, welcome to the show. This is the 85th episode of Sector Spotlight for Tuesday the 22nd of June, recording it on Monday the 21st. My name is Julius de Kempenaer and I'm presenting to you from Amsterdam in the Netherlands. My contact details are on the screen, so if you have anything to share, please do so in any of the channels that you like. Last week we had a almost entire show dedicated to a user question that came in through the mailbag. We got a ton of comments on that YouTube video, so please keep them coming because I love the interaction. However, the fact that we spent so much time on one single question, which was important last week, means that right now we're going to talk about markets. So this entire show is about markets, asset classes, and sector rotation and how everything is behaving at the moment. So let's waste no time and start immediately. Ladies and gentlemen, this is Sector Spotlight. We kick off with the rotations in asset classes, then we see a few interesting rotations on, well, definitely on the daily chart, and how that works in the weekly chart we're gonna take a look at. The chart on the left is the usual 5 trading day, or the daily RRG showing 5 trading days, and for the asset classes that is ending on Friday the 18th. If you look at the performances, then the US dollar is actually very strong. Picked up a lot of strength versus a lot of other currencies, so that's an interesting chart. And then if we look at the benchmark, that lost 1.2%. I think that last week was in the light of, well, mostly seen in the light of weak equity markets, especially towards the end of the week. And that definitely translates into the rotations that we see on this daily RRG. So not a surprise that corporate bonds and government bonds are coming out on top, albeit marginally, gains of 20 and 50 basis points. High yield lost 20 basis points, but that is still well above the minus 1.2% that we saw in the benchmark. And then the stock market lost 2%, ITOT is what we're looking at here. And the both commodity ETFs that we're tracking in this universe, they've been doing really well in the past. They had a very weak week. GSG lost 2.6% and DJP even lost 5.1%. Real estate, another asset class that did very well recently, was down 3.1%. So quite a mixed bag, I should say. Minus 5.1 to plus 1.8, and if we forget the currency, then it's plus 1.5. But that's still almost 5.5, almost 6% difference between the top and the bottom. Most striking tails here, DJP, very long tail, and VNQ, GSG, not so much, but they're all moving in the southwestern direction, which is the weaker direction, as we know. And then we have the US dollar pointing upward, and LQD surprisingly moving into the leading quadrant. Government bond and high yield picking up, and ITOT losing. Now, what I want to highlight a little bit here is the pickup in strength, and we have to zoom in quite a bit, because on Gov you can see that the last day, so this is Thursday to Friday, because this is ending June 18, was actually very strong. So it looks as if that tail is accelerating. And if we look at ITOT, it's difficult to see because it's yellow on yellow, but you will see a similar picture where you see strength in that, or strong negative momentum in that tail, pushing ITOT into the weakening quadrant. Now, how does that translate into the weekly tails? Obviously, the impact's not that big. You know, we know that a couple of days of weakness of strength is not going to have a major impact on our weekly RRGs. But nevertheless, let's see how that translates. The weak rotations that we saw in GSG, DJP, and VNQ have translated in VNQ. Well, very short tail, moving to the right. It's not losing relative strength there yet. DJP and GSG actually are still looking very strong. The only thing that we see in terms of the weakness that we had on the daily RRG is that the acceleration, the RRG velocity, which is the distance between two observations, has shrunk a little bit. But the longer term rotations for both V&Q and the commodity ETFs, still pretty good. In ITOT, we do see some of the acceleration coming back. So here you see that the last segment of that tail is actually picking up speed to the downside. So I'm going to take that in as a negative, as a point of attention. And then if we move to GOVD, you will see that it, where over the last couple of weeks it started to roll over a little bit in that improving quadrant. All of a sudden it picked up a lot of strength, a lot of relative strength, and now back on track for a strong performance further into the improving quadrant. So let me move this one here to the left and see if we can find some charts that belong to these RRGs. Let's see. I want to the commodities, they're still good. That's not a problem. Let's have a look at the corporate bond ETF, because that is an interesting move that we see there. So the bond section, that bond cluster of ETFs is picking up more strength. And what you see here is in the LQD chart that we're pushing against that resistance level. It's we were above it last Friday. It's a weekly chart. Market is now open on Monday, and we are dropping back below it, but it looks as if we have this first signs of higher highs and higher lows starting to emerge. So we do need to take out this barrier around 134, but if that happens, we can see more strength in corporate bonds. And we see that bottoming process ongoing in that LQD chart, and you see that the RRG lines are picking that up. If we go to the ITOT chart, then we see that it is still within the boundaries of that rising channel, but the last high that was set actually last week was only marginally higher than the previous peak. And we are now, last week we tested the lower boundary. Today we're bouncing off it, but we'll have to see if that is a sustainable bounce and whether this is not just a sort of a recovery after last week's decline and that we're in for more weakness. The relative strength of stocks versus VBINX versus the benchmark is definitely rolling over. So this is now definitely picking up speed to the downside. The RS momentum has dropped below 100, which means that it is picking up negative momentum, and that's eventually starting already to drag the RS ratio down. And after a move like that, it's not a surprise that we could see some more weakness in stocks going forward. Let's have a quick look at government bonds, how that looks here. We're still in that recovery move. I wrote an article in the Chart Watchers newsletter last weekend, which zooms in on GOVD and the other elements of the fixed income market. And I think that that boundary here is very, very serious. So this is around 26.75. I think that's a very heavy barrier for government bonds. Nevertheless, you can see the strength that it is picking up versus VBINX, and that means that bonds are now starting to get stronger than stocks, and this rotation here into bonds out of stocks is getting more serious, is picking up pace, which means that we've got to be more careful with stocks now going forward. At least that's what I think. One more chart of these asset classes that I want to share with you. That's ITOT versus GOVD, and you see that this chart is very similar. It looks very similar to the ITOT chart. The big difference here is that this ratio was not able to take out the last high, so this is now a very serious resistance level. But it's also, and let me zoom that in a little, you see that we are now falling out of that channel, and that's a first sign of weakness. So for this ratio, the level to watch on the downside is around 3.5. If we break below 3.5 in that ratio, then the turnaround of stocks versus bonds is definitely turned around in favor of bonds in that case. We're not there yet, but the first cracks are starting to become visible. And I think that this ratio is gonna hold the clue in coming weeks. And looking at this, the regulars know that I've been urging at least some form of caution for stocks, and I think that this is now reinforcing. So I'm getting more and more cautious with the performance of the stock market in general going forward. Okay, let's continue with a look at sectors and the sector landscape and the sector rotation that we saw last week, including today, and how that impacts the longer term rotations on the weekly chart. Left hand side, we have the RRG for US sectors. S&P, the benchmark on this chart, down 70 basis points, and that includes today, so that's a strong day. If we scroll back to last Friday, then we see that the S&P was actually down 1.9%. So the recovery of today is pretty big impact on that list. And it is Monday evening that I'm recording it, so the data is in and I'm going to use it. So if we look at here, then we see that healthcare is leading the pack. And that's a good thing, because healthcare, if you remember, was the sector that was highlighted by the seasonality for this month. So I'm pretty happy to see healthcare coming up on top and leading at least last week. And it looks as if it's going to continue. If we continue down the list, then we have consumer discretionary picking up. Let me highlight those here, that's easier. Scrolling nicely towards the leading quadrant. Same, good week and today as well for technology. And then we had energy, which was that's interesting. If we bring that back to last Friday, then energy was down 5.4%. Obviously today is a super good day for energy, and now it is back up at a loss of only 90 basis points over the last 5 trading days. Nevertheless, that tail is pointing in the southwestern directions, inside weakening, heading towards lagging. We go to real estate, then that is dropping into the weakening quadrant right now, losing 90 bips last week. Industrials, inside lagging. Start of the week, not too good, and now it's improving slightly. We see that the last 2 days here, we're picking up. Communication services, look at that tail. That is a very short tail. So that is a very stable trend. And it's on the right-hand side of the RRG. So that's pretty positive. Lost 1.3%. So that's about 50 bips under the benchmark last week. Nothing super major. Staples moving further into the lagging quadrant, losing 1.8%. Utilities, another defensive sector. Pretty good start of the week, and then towards the end and including today, we're rolling over, insight improving, and we're starting to head back towards the lagging quadrant. And then we have financials straight into the lagging quadrant. That was, we talked about financials last week, and I wrote a blog about it, that financials and energy were picking up. Well, there you go. Financials, not such a good week last week. Well, energy, not such a good week last week, but that's picking up today. And if you look at financials, then it's doing pretty much the same. So until Friday was minus 6.2%, and today they regained something. It's now only minus 3%, but still it's at the bottom of the list. So I have to monitor how that is going forward. And then finally we have materials, which moved into the lagging quadrant and are now leveling off and even picking up a little bit on the momentum scale. Now, how does that impact the weeklies? Let me bring that on an alphabetical order so we can compare them. So materials inside leading, rolling over. That is reinforced by what we see on the daily chart. So that weakness here is reinforced by the daily. Now we have to wait and see whether that tail can rotate back up and keep materials on the right hand side of the plot. Communication services on the daily, very short tail we saw, and if we go on the weekly, then we see that it is crawling up within weakening back to the leading quadrant. So that is a stable relative uptrend on the daily, and that's translating into a further rise, at least on the momentum scale, on the weekly. So communication services could be on the way back to the leading quadrant, definitely not a weak sector. Energy, that tailed down, and we see this curling back up here. Now, energy, as we all know, had a huge run through leading into weakening and has started to pick up. Last week was a pretty weak week, very weak performance, but on the weekly RRG that has not impacted the rotation of the tail, and especially the strength of today makes it very well possible that we will see energy first of all slowing down on both scales, so basically shrinking that tail, and when that happens, turning back up inside weakening and moving back to leading, and that will reinforce that strong rotation that we're still seeing on the weekly RRG. Because mind you, if we use the RS ratio as our ranking metric, then energy is still the strongest sector in the whole landscape in this universe. Now, financials deeper into lagging and not entirely similar as energy, because energy is already pointing up, but you can see that financials is very high on the RS ratio. It's actually the second strongest sector in the universe at the moment. And it's started very, very gradually to pick up a little bit of momentum. So it's on its way to curling back up. So we'll have to wait and see how this tail on the financials on the daily is going to work out. But there is, on the weekly, there's plenty of room to maneuver and to go through. Could take 2, 3, maybe 4 weeks. If the weakness here doesn't continue very strongly and starts to slow down and maybe pick up a little bit, there's a very good chance that that tail for financials will start to curl back up and join energy in its rotation back up to the leading quadrant. Industrials, a couple of weekdays and curling up a little bit, and you see here it looks quite similar as materials, similar sort of sectors. Dropped into weakening right now, but not at a lot of strength on the weekly, and we're already picking up a little bit on the daily. So I'm not too worried about industrials yet, just like materials. We go to technology, strong on the daily, however, still fairly weak on the weekly. It's if I blow this up a little bit, it's still moving to the left, so still losing relative strength. And that strength here on the weekly is the only reason why this is not dropping on the momentum scale. So it's basically keeping that momentum level up. If this starts to roll over, I expect further weakness in the technology sector to show up. If we go to staples, then we see this weakness here on the daily, and you see that the initial strength that we saw moving through the improving quadrant on the weekly is now rolling over and losing strength again. This is a very defensive sector. So we've got some, if we talk about offense and defense, then we're getting definitely some mixed signals, because staples is now, well, it's losing momentum, still moving higher on the RS ratio scale, but it's not a tail that you say, hey, this is very, very interesting and this is very, very strong and everybody is moving into defense. No, not at all. And if we look at real estate, then you see that loss of momentum here on the daily, but on the weekly, that is still very strong. And I think that the loss that we see on the momentum scale here for real estate is what is keeping the weekly tail on real estate for moving at a stronger angle. So it's now almost at 90% or 90 degrees, so due east, and we would, in a very strong situation, you would like to see that heading somewhere between 0 and 90 degrees. 45 would be ideal, but we do need this daily tail to actually curl back up and bring new strength to that sector. But nevertheless, still a very strong sector together with energy and financials, as we just saw. Now here is utilities on the weekly, similar like staples. Well, as a matter of fact, utilities is even further down the road already than staples, because it's already heading down south on the weekly RRG. So here the defense is not showing up, it's not playing out, and we see that the daily tail is rolling over as well. So we got utilities rolling over on the daily and rolling over on the weekly, which makes utilities probably one of the weaker sectors at the moment. And again, if you think about it in terms of offense and defense, that's kind of a mixed signal that you get. If we follow the narrative that I'm sort of worrisome, cautious about the performance of the stock market as a whole, then we may want to see the very defensive sectors showing up stronger to underscore, to confirm that cautious approach. That's not happening. Nevertheless, it doesn't change my view on the market as a whole. Utilities and staples are not in a strong place at the moment. So that's what it is. It's not very usual, but it's happening and we have to deal with it. What is very strong at the moment, and what is also a very defensive sector, is healthcare. And here you see that we already saw that daily tail moving rapidly towards the leading quadrant. And here you see that weekly tail is now also continuing to move further to the right towards that leading quadrant. So the healthcare sector is definitely one of the stronger sectors to keep an eye on today. And it's also, as I already said, lining up with the expected monthly performance for healthcare in the month of June. And finally, we have the consumer discretionary sector. And just like technology, on the weekly scale, weekly RRG, it's the weakest sector. If you look at the scale here, then you see that consumer discretionary is actually the lowest reading on the RS ratio scale. So be very cautious with that together with technology. And then you see this hiccup here of discretionary. I see it as a hiccup. I don't think that is strong enough yet to turn this thing around. So again, with technology and discretionary inside the lagging quadrant on the weekly scale, moving deeper into the lagging quadrant, I remain very cautious with the stock market. So where are we seeing strength? As I said, within healthcare, within real estate, communication services, and if the rotations continue, financials and energy. Let me spend the last few minutes of this show going to look at the charts of a few of those sectors. And the first one that I want to share with you is healthcare, because I think that is one of the better sectors at the moment and it's got a lot of potential. Here is the weekly RRG. You see that the tail is moving towards the leading quadrant. If we look at the chart, then XLV is pressing against that 125 resistance area while it is inside the rising channel. Relative strength, this still is a downtrend, but it is rounding, it's going up, and you see that the RRG lines are already pointing higher. RS momentum is already above 100, that's why it's improving, and RS ratio is following suit. So I'm going to monitor XLV to break beyond 125, and if that happens and we get that acceleration in the move, then I think that relative strength will improve very, very rapidly and push XLV into the leading quadrant. If we look at energy, then we've discussed that curling up of that tail and it being one of the stronger sectors, and you see that back in the price chart. We broke above this falling resistance line. We're now testing resistance in the area around 56.5, and the series of higher highs and higher lows is there. We see the pullback bouncing off today, and we do need to break beyond this horizontal resistance in relative strength to actually make this work. So probably a combination breaking above 56.5 in price, pushing relative strength above its horizontal barrier, and that will power XLE back into the leading quadrant. Go to financials, somewhat similar, slightly weaker than energy, but still inside the boundaries of the rising channel, testing the lower boundary after a dramatic decline over the last 2 weeks. Relative strength is back at its breakout level. If we hold relative strength at current levels and we manage to stay inside the rising channel, then financials could be on the way back to the leading quadrant and be one of the leading sectors in the next few weeks. I think that's the time frame that we're talking about. We go to consumer discretionary. That's one of the weaker sectors. Maybe it's the weakest sector in the plot at the moment. Inside the lagging quadrant, pushing further into it. Looking at the price chart, we're hovering above support. If we break that, we will very likely get an acceleration lower. And if you look at the relative strength, it is hovering above support, peaked below its previous low already a few times. RRG lines rolling over, pointing lower. This is very likely to be one of the weaker sectors. Only if this pushes clearly above 175 and after that above 180, that negative scenario could be turned around. But I don't see that happening anytime soon. If we go to technology, this chart I can dream, and I think you can do that too. On the RRG, still inside the lagging quadrant, starting to push further into the lagging quadrant, lower on the RS ratio scale. That's because of the weakness in relative strength that we have seen since mid-2020 already. It looks, we had a little bit of a hiccup here, so that's good, but the RRG lines still are rolling over and pointing to weakness. The price is challenging its all-time high, so that's the area around 144. When XLK is able to push clearly beyond 144, take that out and continue its rally within the boundaries of the rising channel, then we still need quite some power in terms of price to bring this back up, but that could be the turnaround for XLK. Maybe XLK is going to be the new defensive, which it was, and it lost that status. Maybe it's gaining it back. It's too early to tell at the moment, but that's what I'm going to keep an eye on going forward, given the current weakness that I expect for the market as a whole. And that is based on this chart of the S&P 500. I brought the weekly chart, the annotated daily chart we talked about in Sector Spotlight weeks before. This one, I think what's standing out most is that negative divergence between price and RSI. So we got tech and discretionary inside the lagging quadrant. That is a lot of weight of the index pulling the index down. We see a SPY price chart which is not able to convincingly take out its previous high, and the negative divergence has built up. It's now definitely there. You see the two highs and you see the two highs negatively diverging. So especially a break below 400, I realize that that's quite some points away, but if that happens, that is the catalyst for I think could be a significant decline lower. Look at the previous occasions where we had negative divergences like the one that we're playing out here right now. I think there is enough reason to be very, very cautious for the stock market as a whole, very, very cautious with technology and discretionary. And if you still need to be invested in the stock market, please look at healthcare, energy, and probably financials. Not sure, but healthcare and energy, I think those are the sectors to watch. And be careful with the market as a whole. Ladies and gentlemen, this was Sector Spotlight for today and for this week. I hope you liked the show. Thank you for watching. Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern. I hope to see you back next week, same time, same place.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.